Hi, I'm Megan Shay. Joining us today is Seattle area home mortgage consultant Aaron Haffner, talking about the first-time homebuyer process. Aaron, thanks for joining us.
Thanks, Megan, for the opportunity. I appreciate it.
So to get pre-approved, what does a person need to bring to the table? What's a lender going to ask for?
Well, the lender's going to ask for income documentation, which would be your pay stubs, W-2s, tax returns. And they're also going to ask for bank statements, which would show the money for the down payment, how much you have and where it's coming from. And they'll also want a credit report. So the trick is to get all that stuff up front, because it's a pre-approval. Get all that stuff up front, and it'll make the process go so much smoother than waiting till the last minute to get that.
Great. So why does it seem like lenders are asking for so much more these days?
That's a great question. We've always asked for income, assets, and a complete application, but now we just need to document a lot more than we did before. So that's the major change from a couple of years ago. So the trick is, again, is to get all that documentation all up front versus at the end. So once you get under contract, things are going to become stressful and you want to get into the house. But the trick is, if you're prepared up front, it'll make it go so much smoother. So when the lender asks for those particular things, the trick is to get it up front first and at the end.
So another barrier is the big 20% down payment.
Mm-hmm.
What kind of options are there for those first-time buyers that may not have 20% to put down?
That's a great question, because there's a lot of programs out there that are less than 20% down. In fact, I bet you the majority of the stuff people are purchasing now, first-time home buyers are doing it with less than 20%. So you can do it as little as 3.5% down, FHA loan. You can do a 5% down loan. There's also state assistance programs or down payment assistance programs that allow you to get, they will allow you to put zero down on the loan. So those are plenty of different opportunities. So 20% down is not a barrier for getting into a home. Absolutely not.
Okay. So once a person's under contract, then what would be some kind of do's and don'ts to ensure a smooth closing?
Well, you want to continue the status quo. So if you've been pre-approved already, or you've been pre-approved and going through the process, just keep to what you're doing. Because if you try to do something, I know it's tempting to go ahead and want to purchase major purchase for the house or whatever, but you want to keep that to a minimum, because increasing in your debt amounts with credit cards could affect your credit score. It could affect your debt to income ratio, which may now allow you to get into the house. So the trick is just keep steady and wait until after the house closes to do all that purchasing. The other thing is, you don't want to switch jobs or change jobs or lose jobs during the prior to that process. So as long as you keep it there, you'll be fine. So just try not to do anything crazy.
Save the furniture shopping for the end after you've closed.
Absolutely, absolutely.
All right. So any other advice for us before we wrap up for today?
I think the trick is you want to find an agent or a mortgage consultant who actually cares about the process too, as much as you do. This is your first time buying. It's not a transaction, it's a home purchase. And so you want an agent who's going to give you great customer service. You want someone who's going to keep you updated through the course of the process. And then make sure you're happy with what you have when you purchase that house. So to me, those are the big keys that you want to feel comfortable with the person who's doing that transaction for you.
Great. Well, thanks a lot, Aaron.
Thank you, Megan, for the opportunity.